Hi everybody, today is January 12th, 2014. Bonds jump, dollar slips on weak U.S. jobs data. U.S. government debt prices jumped while the dollar fell on Friday as weaker than expected job growth in December cast doubts on the U.S. economic outlook. A world equity index rose in the Standard & Poor's 500 index. SPX ended up as defensive shares gained on the U.S. job data. Analysis said the job setback also affected by unusually cold weather and was likely to be temporary, though it was not enough to raise some questions about the next move from the Federal Reserve. The report helped support the view of the U.S. Central Bank, which last month announced it would be scaling back its massive stimulus program. Will take a gradual approach to the reducing its bond buying program this year. Since economic momentum has seemed to be picking up, there were real concerns that the tapering would become more aggressive throughout the year. Fears that this report has washed away, said Alec Young, global equity strategist in S&P Capital IQ in New York. People are hoping this is an anomaly, and it seems like it was related to the weather, but if it's a trend, then that is a real threat to the GDP and corporate earning growth. In the U.S. bond market, benchmark 10-year Treasury notes traded 29 to 32 higher in price to yield 2.865%, down 10 basis points from late on Thursday. The 10-year notes fell to a session low of 2.8579%, the lowest in over 3 years, after hitting a near 2.5-year high of 3.0.4% last week. U.S. non-farm payroll rose just 74,000 in December, the smallest increase in nearly 3 years, and far below the 196,000 forecast by economics. The unemployment rate fell 0.3% to 6.7%, but this in part reflected people leaving the labor force. Those that are retiring, going on disability. People have just given up looking. The central bank announced in December that it would trim its monthly purchase of bonds to $75 billion from $85 billion, and many economists have expected it to decide on a similar size cut at its next meeting on January 28th, 29th. The dollar fell broadly following the jobs report against the yen. The dollar last traded at 104.10 yen, down 0.7%, and below the session's high of 105.12 yen. The U.S. dollar index, DXY, which measures the greenback versus 6 major currencies, was down 0.5%. It was clearly a disappointing number, and the markets are reflecting that disappointment by selling the dollar across the board, said Omer Saner, Chief Market Analysis at Commonwealth Foreign Exchange in Washington, D.C. November's payroll figures were revised higher. However, the possibility that winter weather had affected the report had some investors thinking the December numbers will be revised later as well. Gold rose 1.5% for the day and notched up a third consecutive weekly gain after the disappointing U.S. jobs data. Spot gold edged up to $1,245.58 an ounce. For the week, gold was almost 1%, rising a third consecutive week, its longest weekly winning streak against August. Oil futures also rose, reversing 2 days of losses as traders covered short positions ahead of the weekend and as reports of production problems at a major UK oil field fueled supply worries. In New York, oil gained $1.06 to settle at $92.72. Brent crude oil futures rose 86 cents to settle at $107.25 a barrel. In contrast to the Fed, the European Central Bank has kept holding out to the prospect of yet more stimulus. And I reported maybe 2 weeks ago that China is really concerned about the downslide of the dollar. Alright, bookmark my site. I'll keep you up to date. Please stay safe, and I'll talk to you later. Bye.